Hello everyone. My name is Roshni Takhre, student of Dr. Ambedkar Institute of Management Studies and Research, Nagpur. Today I am here to tell you about my research on topic analytical study of Forex reserve, prices of crude oil, Indian equity market interdependence and its impact on prices of gold in India. Under the guidance of Dr. Vivek Pimplapure, Associate Professor of Dr. Ambedkar Institute of Management Studies and Research, Nagpur. A short introduction about my research. Today, we are finding that many investors are seeking different opportunities in the market worldwide for doing investment, including equity market, oil market, commodities market, and currency market. So this research paper will consisting in finding the relationship between the more specifically on Forex reserve, crude oil rates, Indian equity markets, and its impact on gold market in India or not. The research paper will include for the period of 2012 to 2021, including the current Russian and Ukraine crisis for emerging Indian economy. The study will be also add the existing literature of all variables mentioned above using year-wise data and perform imperial analysis to find out the interdependence among these variables. Introduction. Gold being one of the most important commodity traded in the market as well as in the international market worldwide. It is a still lending commodity indicator for macroeconomic policy development. Due to fluctuation in the interest rates, risk stable in getting returns, not stability in getting returns, fluctuations in the stock market, increase in the inflation have made many investors to shift to the safest investment, that is to the gold. This study will help in find out the interdependence on the gold specifically and helps in explaining the movement in the prices. During the research, I have conducted a short survey in which it has found that many researchers were already done research on it and find that gold being one of the most important commodity in the international market and has played very important role. Then these researchers also have found the relationship between the other variables as I've mentioned of about Forex reserve, exchange rate, crude oil, Indian equity markets. According to them, there is a positive relationship between these three variables and the prices of gold in India. I am going to further study about all these three variables among which it is affecting the most to the gold prices movement and also the other factors which are impacting most on the gold returns. Research and methodology. The study is completely based on secondary data, which is collected from websites and journals. And the study is in detail about Forex reserve, crude oil, Indian equity market, and Nifty 50, which is the one of the most important component of Indian equity market, has be a part of the study. Objectives of this research is to find out the interdependence among these three variables on movement of gold in the commodity market, identify the factors which is affecting the most, which comes like macroeconomic factors, variables, changes in the interest rates, etc. Evaluate the impact of various price determinants on gold prices by taking into consideration the other three variables, annual return, study about these three variables in detail. Hypotheses were formed during the research was gold prices are not dependent. Gold prices are not co-integrated with these three variables and there is no effect of these three variables on gold rate market in India. Data analysis. The data were collected their historical annual percentage returns and identified the interdependence of gold. For almost 6 years, between 2011 to 2017, gold prices barely moved in India, but thereafter there is some marginal traction. When the situation like COVID came in 2021 and 2020, where many investors has shifted their investment to the gold, as it is one of the safest investment worldwide. The test of regression will check the interdependence of the gold, further analyze which among these three variables impacting the gold returns annually, and also the other factors which are impacting most on the gold market in India. These are the various returns of last 10 years generated from gold returns, Forex reserves, crude oil, and Nifty. This diagrammatical representations, as you see in gold and crude oil, we see some interaction between their returns. In this, we cannot see any interaction. It means they are not integrated with each other. And in here also, we see some integration between Nifty and the gold prices. Now, let's test and find the result. As per the test of regression analysis, you can see Y being the dependent variable of gold, and B1, B2, B3 are the other three variables mentioned in the slide, in which we see the negative relationship between these three variables and gold returns. But as per the P value generated, in which we can see that Forex reserve crude oil returns does not have any impact on gold returns. So in the case of gold, prices are not dependent, they are not co-integrated with each other. But in case of Nifty returns, null hypothesis is rejected as per the P value, which means it has impact on gold returns in India. As the returns from Nifty 50 investment increase, that can make the changes in the prices of gold, as it is the safest tool for investment. So the returns from Nifty can impact the gold returns. So the gold prices are dependent. There has some co-integration with Nifty returns as per the analysis. Findings during the research were, during the research, it has found that the other factors have effect on a movement in the prices of gold. That can be a demand and the supply of gold in India. Interest rates have also inverse relationship between gold. Typically, gold prices drop when the rate rises. Currency fluctuation also influence the prices of gold, as gold is traded in USD in international market and the rupees dollar. Conversion impact on prices. Geopolitical factors causes crisis like situation impact gold prices positively, as gold acts as a safe haven and outperform other asset classes. Suggestions: the time period taken for the data analysis should be extended up to 25 years, as only Forex reserve and crude oil, Nifty, and the gold annual percentage returns were as a part of interpretation. The other variables, exchange rate, interest rate, currency fluctuation, are not used for the test part. So it can be used for the test part, and also can conduct the detailed survey on this, about these variables in detail. Then other than that, the other factors also, like fluctuation in the interest rate, CRR, SLR, marginal liquidity ratios, can be a part of the study. Coming towards conclusion part, according to the research and regression tool in Excel, gold prices are independent. They have not any impact on Forex reserve and crude oil. But in the Nifty returns, the null hypothesis is rejected. It has some integration with gold returns. There are many other factors like find during the analysis made, and finding of the detailed information, demand and supply of gold in India, currency fluctuation, exchange rate, appreciation and depreciation of value can also impacted on gold rate in India, and these are the various factors can affect the gold prices in India. Thank you so much.